Because again, if you're not making improvements, then guess what your results going to look like? The exact same as they were before. Now, if you're happy with last week's results, then guess what? Do exactly what you did last week. But if you're finding that there's areas of improvement that you keep seeing patterns in terms of like either holding a trade, letting a trade get to the proper entry before you enter, whatever your specific pain point is, make sure that you bring that to the forefront this week. Put that on somewhere visible while you're trading so you have that constant reminder and make sure to make those improvements. Because trading is all about progress. It is not about perfection. You don't have to be perfect every week. We're not neurosurgeons, for God's sakes. All right. Neurosurgeons can't exactly have a 99% hit rate. You got to go for 100. As traders, you don't have to have a 100% hit rate, but you do have to be making improvements, especially in those pain point areas. So as long as we make sure we're headed on the right track, I think we're doing pretty good. Chris Jazz said, welcome back. Waiting to hear some good vibes for the week. Amal, if you came onto this stream to hear some good vibes, I got a news flash for you. Can somebody fill them in on which live stream they landed on? See, you must have thought that you landed in Narnia or something. No, no. See, these are financial markets, right? So what they do is they're going to eat you alive this week. And so we're here to be sharp and we're here to set the game plan strategy. So I'm not sending you all out to war without a proper game plan. Because guess what happens when you're trying to figure out how your gun works halfway through the firefight? Not good. Not the time, right? So go, have you guys tried this new, what is it called? What's that fucking candy called? The Take Five. Have you guys tried this new Take Five flavor? Yeah, Tom, not the time, right? Wartime. So you guys came here for some good vibes. I'm going to give you guys good updates. I'm going to clarify what's been happening in terms of the retracements, where Nasdaq is on the higher time frames in terms of like location wise in this retracement. We've been on an obvious correction. Are we closer to the bottom or are we closer to the middle? Is there more room to the downside? We're going to be answering those questions on today's live stream. Now put something in the
Exact same
chat.
as they were before.
Whoa, whoa. What kind of YouTubeception's happening right here? Put something in the comment section if you're alive. If you guys just let me know if you have a pulse or not. Just run your keyboard, grab your cat, run your cat through. Don't do this actually. It was a joke, but just get the cat across the keyboard. Let me know that there's life on the other side. If there's not, then me and my wall will just sit here and have the Zoom call ourselves, right? So as long as you guys let me know that there's a vibe or that there's a pulse on the, so you got me thinking about vibes now. That there's a pulse on the other side of this Zoom call, we'll get the show on the road. He said the GOAT is back. No, no, not the GOAT. Just fit the description. I don't know. You open up the dictionary, my face might show up, but I would never call myself the GOAT ever. Right? Do I fit every single last qualifications? I mean, you know what I'm saying? The evidence is clear. So first thing I do during the week, and I'm really just doing this from scratch here, is I'm gonna go check. Oh, can't really X out of Zoom. So let's go. I'm gonna go check some of the news events for the week and make sure that we don't fall into any red flags, any emergencies here. Let's see what we got. Forex Factory. Okay, so let's see what we got here. So what I do is I filter out to get a full weekly view. And I also go to this filter bar, this little green sort of filter icon at the very top right, and I filter out the currencies that I'm specifically looking at. So because I trade USD pairs, I want to take a look at some of the Japanese only because they're in a very sensitive time right now. Kind of, they're trying to salvage their bond market and their currency. It's very interesting to watch what's happening there. And then importantly, I look for the impact events. I really only want orange and red folders. I want high impact news only. The low impact stuff, you could wring your head around the pole all day looking at every single micro ISM release and some of these, kind of less relevant and less impactful releases. Don't do that. Big picture stuff only. So we have a pretty heavy week, especially for US. Looks like we have core retail sales, one of the earliest indicators of economic health. If people are spending, that typically shows up in corporate earnings, which typically shows up in corporate, like kind of just stock market performance when they go to their earnings reports. The relative performance of the stock market is related to how much money these companies make. And how much money these companies make depends on how much money retail customers are spending. So if you want to go all the way to the beginning of this chain to figure out the source and to figure out some early data about how corporations are going to be impacted in the next month, you kind of just want to look at the core retail sales numbers and just look at the trend to see if that trend is in the positive direction or if it's in if it's in the negative direction. Looks like we're expecting a 0.3% increase as the forecast month over month, which means that sales are picking up. Okay. We have the FOMC press conference, excuse me, on Wednesday. So you guys know 2 p.m. they're going to release the statement. Expectations of no changes to the interest rate will be the judge of that. We're going to go to the Fed Watch tool at the CME, the Chicago Mercantile Exchange website. And this is basically a live view of the market betting on Fed funds futures, which is just another way of saying this is like the Vegas odds, the over under for if the Fed's going to raise rates or drop rates. Okay. So March 19th, it looks like there's a 99% chance that the interest rate remains unchanged. Okay. There's about an 85-15 chance of at the next Fed meeting out in May that there's about a 85% chance that they're going to keep rates the same. And so where does it start changing over? Where does the blue number, which is like the odds that the majority of the market is betting on, where does that start to shift? Is at the June meeting. So we're not expecting any rate cuts, or the market is not expecting any rate cuts until the June meeting. So very straightforward stuff. So tomorrow, no interest rate change. And so that's exactly, the market doesn't really react to the result of the news. What it does is it's reacting to the difference between the expectation and the reality. So if the expectation is that there's no interest rate change tomorrow, and they end up changing the interest rate in either direction, there will be a massive move. Now, if everything goes according to plan, tomorrow Jerome Powell, or they issue the statement, there's no change, and then Jerome Powell gets out and he says exactly what everyone's expecting him to say. What do you guys think the market reaction will be if there's no change to the interest rate, everything goes out exactly as expected? What do we expect? Right? So if there's an adverse reaction, if the market does, or if the news comes out exactly completely different than what the market expected, we know that. People don't like when you switch things up on them. Now, what happens if the news comes out exactly as the market is predicting, as the Fed funds futures markets are pricing in? What happens? Okay, Christine knows. Christine says bullish and positive reaction. Exactly. Because the market likes to work on certainty. And so if everything's going according to plan, if they pay all these economists billions of dollars a year to try to predict this stuff and their predictions are accurate, it means that whatever bets they made prior to this news dropping, right, there's been no effect. And then people feel more confidence in the ability to invest into the market. Okay, so uncertainty, people go risk off, which means they want to invest in safer stuff. Certainty, people go risk on because when you can expect what's going to happen in the future, you can build a more cohesive investment strategy and you can have more confidence to invest in the future. So we see money going into the stock market. Make sense? Okay. Now we can look at this at a technical standpoint too, but I'll show you guys the relief of everything coming out as expected, typically as bullish, and that's my expectation for this week. Is it going to just fly bullish the second the news comes out? People, what do you think? Anyone who's been trading for longer than 2 weeks, what do you guys think? I just told you that this is going to be positive for the stock market. Is the second the news comes out, is the market going to fly bullish in one direction? What do you guys think? Because some of you guys just heard the confidence and the conviction in my voice when I said that I'm expecting a bullish reaction here, right? So immediately, if you're a novice trader, you think as soon as that news drops, it's going to go up. And then you enter a trade and your whole account gets wiped. And then you watch the market fly in the right direction. And you're sitting there wondering what just happened. Can somebody explain in the chats what is this phenomenon here? Big Luca, no limit is on here. That's awesome. Devaney, what's going on? Oh, the chats are live. Drop a like, people, please. And thank you. See, I learned some manners since I've been gone, right? I was a rabid animal when I was here. I was a feral, right? Didn't even know how to eat at the dinner table, didn't know how to have social interaction. And I've gone and I've learned some manners and I've come back. It's please and thank you now, right? I'm not roasting anybody on social media. I'm not coming at anybody in the comments section. I'm a changed man, people. Do you believe me? Do you believe that this is real? Because if you did, you're a fucking goofy. All right, excuse my language. Sorry. No, no. Because I'm me. Taxes, cockroaches, and me. That's what's going to be left after the next nuclear war. You have to get a fucking army, get rid of me. All right. King Arthur himself can't pull me away from these charts once I'm locked in. Market goes up if it's what people expect, and then it is not going to go up in one direction exactly. So if everyone is positioned, and this is again, I've said this a bunch of times, but even looking at broker and prop firm data, prior to every high risk news event, the majority of the market or the majority of the participants on the platform are positioned in the right direction. So directional bias, most of the traders are directionally correct. And so if market makers are watching this and they want to buy a bunch of let's say they want to buy the stock market index, in order for them to put in billions of dollars of buy orders, they need to have enough sell orders on the other side. Now, if everyone wants to buy stocks, there's none left to sell them. What happens? Right? They need in order to put in these orders with margin. So there's going to be a big whipsaw. The market might start dropping for a little bit. And then all of the retail traders and hedge funds, these automated, let's call them they're risk parity funds and high beta funds, the funds that are trying to outperform the market by trading in and out and by trading with high margin. And they're using algorithms. These algorithmic funds all become net sellers if the market drops real quick during a news event. Because after a certain percentage drop below the mean, everybody becomes net sellers. So there's a bunch of selling pressure, right? It just the market goes down a little bit and then the institutions buy it back up. That's how you get these wicks during these news events. So it's okay to sit on the sides. It's okay to miss a trade because there will be a retest. It's not going to happen in that session. It might not happen this week. There will be a correction of this big impulse that happens. You do not have to be first, and you sure as hell should not be last at chasing the market. So when the news event happens, is it going to move in one direction all the way through? No. If you get a great entry and you understand the directional bias, then you can look for entries at these key levels. But these high risk news events are not the time to catch the bottoms of the market and hold or whatever you think that might happen. If you're trading on prop firms, you're going to run into issues with trading directly around news events. And then there's going to be a whole new set of issues, correct? Where you might be denied payouts because of violations of certain rules and stipulations. So, key takeaways. This, like this Wednesday, we're expecting no change to the interest rates. If that happens, then the market will rebound bullish. In the immediate term following the news event, there will be a whipsaw where the market will move in the bullish direction and the bearish direction aggressively so as to play on the emotions of traders and to entice a lot of erratic behavior. And then what will happen is the chart addicts team will come and be the cleanup crew because we're waiting at the right key levels and we're going to take this thing all the way home. Cool. Risk management is key. We have unemployment claims that comes out weekly every Thursday. Retail sales, very important stuff. Bank of Japan also releasing their monetary policy statement. So then we get to have between between nighttime on Tuesday and what we consider like midnight and morning time on Wednesday, Japan's going to have their own policy rate. Who thinks that Japan's going to go off of 0% interest rates? Why do you guys think I have Japan on here? I'm waiting for the day that the earthquake happens, the tsunami happens, where we start to see some life in their interest rate. This will be the biggest trade since COVID and since 2022. So I'm watching that very, very closely. Okay. Any questions, comments, concerns so far? We're good to go. I'm going to show you guys what's happening here on the charts, and then we'll go through some overall market news. So let's take a look at how this might look for NASDAQ. So I have two options actually drawn off for NASDAQ. I have the short-term picture and the long-term picture. Now, Chart Addicts members, you guys know exactly what I'm looking at here. We have the daily range. And if I was to delete all of my drawings, essentially we have the beginning of this impulsive trend and the very top of this impulsive trend. And the way that we know it's an impulsive trend is because we have a series of higher floors until we eventually kind of bottomed out here. And then we had a series of higher highs, which is by definition a bullish trend. And then what we started seeing is this big drop coming in over here, where now we're creating lower lows and lower highs, signifying a correction. Okay. This is the beginning of this big impulsive move. And so until we break these lows, this is just a correction. Does that make sense? So we're not, we can be in a short-term bearish market. We could be seeing some bearish momentum over the past few weeks, but we're not in a bear market by any stretch of the imagination. Okay? Because we still haven't violated these lows. So as you can see, we had this big impulse, and then we had this correction. Now we have this big impulse, and we're seeing a correction. And if we look at this last impulse and correction, this thing basically came down about 90%. Chart Addicts members, super secret fib level. Can't say it, right? I can't put it out there because it's super secret, but you guys know exactly what percentage of this overall impulsive move has been corrected. So if we were to assume the same thing, all right, then technically this thing could correct as low as all the way down here if we're going to go to 90%. But what I've been doing is first I identified the top of this move. This is where we had this area of consolidation, where the lows stopped getting higher. They started going sideways. And so the highs, they were going lower and higher and lower and higher. They were consolidating in this range, but that's clearly a consolidating shift. Then we started to have this correction, and I started to look at these levels that we had marked off before as maybe this is going to be a correction to this zone. And then once that area got violated, I found the next low and I found this next potential level. Are you guys all with me here? Higher time frame, we got a very good shot of correcting back down. Probably another 800 points. All right, which is a long way down since we're on the daily. And so there's two options here. If we break back above this daily support and resistance zone right here, and we start to establish a new higher low, so we kind of show that the momentum is now headed back with new highs and new lows, then this is going to be our entry zone right here and take this thing all the way back up to the top of the range. This is going to be the start of the new bullish trend. Now, because I told you guys there's going to be some BS around the news event, wouldn't it be really cool if we started to fake up and then around the news event we saw a sharp crash into our entry zone? And while everybody is busy becoming a seller because of the sharp move that happened in a small time frame, we take a Model 3 entry straight to the moon. Wouldn't that make sense? Kind of timed around the news event and with the proximity of how close we are to the higher time frame 886. For me, it makes a lot of sense. Members, put a one in the chat if we're on the same page here. Right? So on the smaller time frames, it would look like consolidation, fake up to get all the buyers to think that this is a real bullish breakout. Smash in, double bottom, and send. Could it go lower to the next level? Sure. But this would be the ideal sort of entry model here, especially during a high impact news event. Make sense? Let's see, I probably lost YouTube already. Got the same setup for NAS, liquidity grab. It should retest. Bulls are coming. Wody, wody. Speaking of Modi, if you guys really want some insight on what's happening in India, India's perspective towards America, if you guys are like, well, why would I care about what India is doing? 1.4 billion. America's only 300 million. All right, we're always talking about this Iran. We're talking about Russia, right? Nobody ever mentions that Nigeria is 280 million people deep. Probably worth figuring out what's happening in Nigeria. Now, we talk about 300 million people in the US, hundreds of millions of people in Russia, European Union, NATO. No one talks about 1.4 billion people sitting on the subcontinent, connecting all these different people. Probably important to figure out what that rising economy is going to do over the next 10 years if you want to make some serious money with your life. Talking about all the opportunity is gone. There's no opportunity to make money in my local region. Fuck your local region. 1.4 billion getting online, getting digitized, getting going from unbanked to now bank, crypto, everything in between. Probably important to know what's happening in that country and how that country views America and the rest of the world, the conflicts and their partnerships. So, Lex Friedman did an incredible podcast with Narendra Modi, Prime Minister of India. And I thought it was phenomenal, right? Shout out to Lex Friedman for getting literally just honestly the number one podcast in the world. Go ahead and check that out. Side note completely, but I was listening to that earlier, blew my mind. India loves America. They love Trump. I like to hear that. Big partnerships on the way. If China wants to talk crazy, hey, India just offered to be the manufacturing house and sort of like the brains and the operations behind this AI revolution for the US. Let's just say we got a chance here, people, at having some serious competition around the world. And because of that, everybody tends to play nicer because no one person holds all the chips. I think it's a great, great future to have. Looking forward to seeing how that develops. All right. So, long story short, I'm going to be trading inside of this trading range for NASDAQ on the short terms. So, on the 1 hour, sort of 30-minute time frame, we have a very clear range here. Once we finally break out of this range, kind of hit these extension levels, we're going to find our way back in. Upon the retest of this resistance zone, I'm going to short it. You heard that right. Your Wi-Fi did not glitch on you. I did just say I would short NASDAQ on the 1 hour time frame specifically. And once it gets back down to the bottom of the range, I will also take a scalping buy at the bottom. If you've taken the NASDAQ masterclass, congratulations. We have one of the clearest ranges of all time. We've already hit a duck. Duck. Now we're waiting for the goose. And same thing on the low side. Very easy. If you haven't taken the NASDAQ masterclass, then so help you God in these market conditions. Oh, man. I can't even imagine. All right. Last piece, because I'm a nerd for this stuff. Elliott Waves was one of my foundations. Let's get down to the 30-minute time frame. Start of the trend down here, double bottom, 0. Actually, wait, isn't there a tool for Elliott waves here? There is. An Elliott wave basically just tends to measure a specific impulsive move, and then you're able to figure out how far into that trend you are. If you're towards the end of the waves, so typically Elliott waves move in 5 waves or 7s, 5 being the most common. Once you've hit all 5 waves, you're typically at the point where you're going to start to see a correction. It's going to start to come back down. And that's when you have a reset of the trend. And so a lot of people, they keep seeing higher highs and higher lows, and they want to buy this up close to resistance and at the end of a 5 wave. Not a very smart place to keep hammering buys. This is where you start to reduce your risk if you want to buy it, or potentially look for some shorting opportunities. So that's why it's important to know where am I located in the overall structure or in the overall momentum. So I'm going to get this Elliott Wave tool here on TradingView. It's under Elliott Waves, Elliott Impulse Wave 1, 2, 3, 4, 5. Let's count them up. 0, 1, 2, 3, 4, and 5, where we have a series of higher lows and higher highs. All right. Wave 3 is higher than wave 1. Wave 5 is higher than like it's all it's all checked out. So what happens here is then we have an XYZ correction or an ABC. 0, A, B, C, and then we continue the pattern again. Okay? Why is it typically like 3s? So A, B, C versus another 5 wave down is because if you guys have ever traded NASDAQ, you'll notice that it usually falls a lot faster and a lot quicker than it climbs up. Right? And so where the climb goes up like an escalator, the drop is more like an elevator. And so you'll typically see the five wave in the direction of the true trend, and then you'll see the corrections be very sharp and just, drop number one, retest, drop number two, and then we continue the trend. Does that make sense? This is a little side technical analysis lesson in between the Sunday market outlook. You're welcome. Hopefully, you guys just learned a thing or two. Put a one if you guys learned something right now, or at least got a good refresher. Put a two if you checked out halfway through me talking about numbers and letters and your brain went to what you're going to have for dinner. Two, the monkey with the symbol came on when I started talking. One, you're still here. You guys remembered a thing or two. Is there a crashing monkey with us with the symbols in the head right now? That's number two. Number one means we're all on the same page and this made sense to everybody. Okay. Looks like we're good to go. All right, let's cover matter of fact, CA members. Let me know what pairs you guys want me to cover real quick. I'll cover those while I pull up Bitcoin. Okay, what is Bitcoin doing? Sheesh, we're close to the recovery, but not close enough. This is why we take partials, people. This is why we take partials. So this is actually the best case scenario for all of us who don't own at least two, three, four Bitcoins. If you don't at least have one Bitcoin to your name, this is probably the best thing that could have happened to you. Okay, is a correction back down to levels where we can actually make some money. Now, are we gonna make some serious cash buying Bitcoin at 82 and holding it to 120? I mean, that's 40%, I think. Don't quote me on that. But I'll still take that return. The real goal is that the entire crypto market follows Bitcoin's price trend. And so if we're in a correction right here, I'm willing to bet that if I pull up the crypto market cap, it's going to look very similar. Matter of fact, I'll lay both charts on top of each other so we can actually compare these. Compare a symbol. Let's do the total crypto market cap. Crypto market. Total crypto market cap. Um, can I get a real broker feed here? They don't want to put no Coinbase or something? Okay. Sure. So this red line right here is the total crypto market cap, which is this is like percentage change, but I'm guessing it's trillions, whatever it might be. I'm not going to sit here and mess with the settings. It's the exact same as Bitcoin's price. Bitcoin is the industry leader. Whatever Bitcoin does, the market cap will do. So if you're looking for XRP, if you're looking for Tron or Cardano or any of these assets to buy, you're going to be waiting for these corrections in order to get a good price. So let's take a look at XRP right now. XRP is in a bit of a correction, same way that Bitcoin is, but not as deep of a correction. Right now, it's still holding above the $3 line. Let's get rid of this. We're still holding above the $2 line, excuse me, the dollar and 90 cents. And that's actually due to the fact that America is going to become the crypto hub of the world, or at least the crypto capital, as Trump's administration has claimed, which means that the only real American company that's in the top five is XRP. And Brad Garlinghouse, the CEO of XRP, has been seen golfing with Trump at Mar-a-Lago. And the same token, if we're vowing to become the crypto capital of the world, we're going to be putting on the number one crypto company that exists in the US and kind of giving them a lot of the backing. And Trump came out with that famous tweet last week where he shouted out five very specific tokens. XRP was on that list. So long story short, there's a reason why XRP is holding better than, let's say, Bitcoin specifically, which is also a good sign for risk taking, meaning that people are willing to take more risk by buying these. I'm not going to call them speculative, but I would say less stable coins than Bitcoin. So that's a pretty good match. Now, if we look at Solana, Solana is not having the same fate as XRP at all. We're still a long way from the lows of $15 here in Solana, and then we're in a new range for what is low and what is high. And so this is actually one of the best opportunities for me personally to take a look at buying Solana. And I'm not going to put all my money into at one time. I believe in dollar cost averaging, meaning you put your money in proportional to how far it drops. And so if I have $1,000, this is me personally, not financial advice. Okay, I would say consult a licensed financial professional, but let's be honest, none of them are going to know what the fuck they're talking about when it comes to crypto. But maybe they will, and you should consult them and not listen to me because I'm just a guy on a screen on YouTube and I don't know anything. This is my opinion. So I got $1,000. What I'm going to do is I'll put $100 here, maybe 200. And then as the market drops, then I'll sort of, this is the only time that I'll martingale because I'm not doing this with any margin. I'm doing this just one to one. I'm going to buy Solana, put it in my Coinbase or my wallet or my Exodus wallet. Um, so that's not my Exodus wallet, my Exodus wallet, or put it in a hard wallet. There's no margin involved at all. Okay. And so I'll put 200, 300, and then if it drops any lower than this line right here, then I'll put the remainder of the 500 at the very bottom. So that way I'm making the most profits off the positions at the bottom and I'm taking the least risk on the positions closer to the top. Does that make sense? So dollar cost averaging, this is one of the best prices. As you guys can see, we're at a monthly support right here. Okay. We've been holding the support level since, or sorry, this is like a damn near, yeah, it's a monthly support or annual support. This is basically a whole year. We first touched this level in March of 2024, and now it's March 2025, back at that same exact level. Okay. So this is where I'm going to start to layer in buy orders. If you guys are rich, then you'll add a 0 to each of these orders or more, right? And if you guys are working with less, then basically you'll just put 20 bucks, 30 bucks, 50 bucks. This is a great way to start getting in the habit of entering at the right times and seeing your money double or triple. Very important stuff. If you guys are putting zeros back here, 5,000 at 126, if we get back up to the highs from January of this year, which was like 260, you'll make about 2.5x on your money. So you'll be sitting at like $12,000 from the 5K. All hypothetical. Please consult a licensed financial professional. Do your own research. That is my opinion. Okay. Crypto market on a retracement. A great place to start dollar cost averaging. You're not going to get rich buying Solana at 260, but you got a much better shot of making some returns if you're buying in the discount range anywhere in 120 and below. It's a very, very, very good discount range right here to actually make some returns. They tried to kick us out. They tried to hike that price to the moon so that they can take some profits. And we're here making solid investment decisions so that we can also take advantage and take part in the digital revolution. Okay? That's all I got for you guys. Drop a like on the stream unless you're whack, right? Don't like the stream if you're whack, but like the stream if you found some value in this and if you guys actually appreciated some of the information that you heard today, whether it was the technical analysis breakdown, going through Elliott wave trends, kind of giving a brief overview of the big picture on NASDAQ. We're pretty close to the bottom. You know, we could climb above and form a new floor. I think we have one more drop here at the Fed meeting. We talked about Fed meeting expectations, went on the CME Fed Watch and the CME Fed Watch tool to look at the expectations for Wednesday. What else? And then I just went through a full crypto overview and I made some jokes and it was fucking hilarious. If that don't deserve a like, I don't know what else to do, right? I get the mariachi band. Somebody. Good enough? Okay. Sign up for the webinars on Wednesdays if you guys want to learn more about NASDAQ. If you guys want to fully just jump into the class and learn how we trade and learn how to actually learn a strategy that's consistent, that you can apply every day, that has a very clearly defined set of rules that you guys can plug and play. The same strategy we trade on these live streams. Join the NASDAQ Masterclass on our website. And of course, if you guys have not checked out the FXSummit conference, the #1 conference in the world for traders, investors, and crypto, head on over to FXSummit2025.com. All the links are in the description. Guess what? I love you guys. It's good to be back. Drop a like on the stream, and I'm going to catch you guys live tomorrow morning.